Welcome back. Lagos is on lockdown and movement of persons are restricted except for essential workers. But hours before the restriction commenced, commodities prices surged across markets in Lagos and other parts of the country, of course, were also affected. Now let's talk to the CEO of Financial Derivatives Company, Mr. Bismarck Rewani, for some analysis on the commodities markets. Good morning, Mr. Rewani. It's good to have you here with us in the studio.
Yeah.
So let's begin with the burning economic issues now, starting from the base. Of course, the Food and Agriculture Organization has predicted a looming food crisis due to the lockdown caused by the COVID-19 pandemic. Is this also your forecast at the FDC?
Sure, definitely. There are three dimensions to this. One is that point of production. Two is point of transportation and logistics. And three, point of consumption and distribution. So in all cases, the lockdown affected both globally, regionally, and domestically. So will there be a looming food crisis? Yes. Will there be famine? I don't think so, because people are consuming less and people are locked down. So there's just a supply chain disruption, which I think will ease out in another 2 months or 3 months, depending on how long this COVID crisis.
Now, talking about the lockdown now, for instance, I'm sure that on your way here, you saw the fact that there's a barricade along, stopping movement of even petrol tankers and those even carrying essential commodities such as food items and all that. Won't that also have an effect on the food
in Nigeria? It does. You see, here, Nigeria is making a decision to save lives, but at the same time, you need to save livelihoods, right? So livelihoods is what we earn. The bulk of the Nigerian populace live on daily, probably at best, weekly wage. So if you disrupt their activities past 1 day, then you immediately send them into poverty and probably starvation. So it's that delicate balance of trying to save lives, which is more important, but also you have to save livelihoods. Well, if your livelihoods are not saved, then your lives will also be in despair. So I think that's happening. I noticed that there's been a lot of panic buying. I've seen that prices have spiked. Domestic prices have gone out of the roof. Garri, palm oil, yams, it's just ridiculous. For example, yams we have up to 1,200. 2 weeks ago, these yams were going for 700. They're now going for 1,200. And look at pepper. Pepper has gone from 5,000 to 8,000. Tomatoes have gone from 6,000 all the way to 9,000. This is ridiculous. But the point is that because there's a limit to how much money these people have in their pockets, they would buy, and then, of course, after a while, there'll be no cash, no effective demand. And so we begin to see those prices begin to taper downwards. But in the short run, there's going to be a lot of inconvenience, both personal inconvenience for movement, or more important, inconvenience of the pocket.
Now, you talked about saving lives and saving livelihoods. Now, how do we strike a balance between these two?
Well, that's a very interesting question in the sense that the livelihood is important. That's the economics. The life is healthcare. So are we well organized enough to actually save lives? I mean, talk is cheap. We're making all of these good statements. But when you come down to reality, do we have the testing kits? Do we have the protocols? Do we have the procedures? Do we know what to do? How many people have been tested? How many people are healthy carriers? But luckily, I'm told, and I'm not sure about that, that because of the high temperature and the high humidity in this country, the virus, that particular virus, does not thrive. Whether that is true or not, one does not know. We've heard about chloroquine tests. We've heard of all sorts of speculations. But what we do know is that this is not just an epidemic, it's a pandemic, and that lives are being threatened across, and that this virus is not going to stop. So let's wait and see. At least Nigeria has good intentions, and the president has come forward to make a statement. The health care committee and all of that are working full blast. The sweetness of the pudding is eating. If 2 weeks from today we see that this thing is tapering off, then thank God. But my fear is that there could be secondary reinfection, right? secondary infection, right? Which means that if we're not careful, even if you tested negative, then or positive and then negative and then you become positive again. I understand that the immunization, there's no proof now that if you have been infected, that you cannot be reinfected. So it's difficult, but that's where we are.
Let's still talk about the effect on food now. Of course, here in Nigeria, the lockdown has taken effect in Lagos and Abuja. Of course, Ogo will start on April the 3rd. But of course, there's no total lockdown upland yet where farming supposedly should still be going on.
Yeah, but if you look at it, technically speaking, in the villages and in the rural area, there's already social distancing. People they're not congested and all that. But I think it's understanding the risks, the risk factors here. So there has to be information. And even if there's social distancing, assuming today that you walk into a place and they tell you that your temperature is 39 or 40, do you know what to do? I don't think you do. I don't think anybody knows. Nobody has said, okay, go to the isolation center. There are 200 beds, or 400 beds in a city of 18 million people. So I think we are making very good efforts, but the infrastructure is still inadequate. And there's work to be done. The Minister of Health was very clear to say that this is work in progress and they are doing all they can within the resource constraints they have to do what they have to achieve the desired objective.
Well, let's talk about the effect on crude oil prices now. Of course, we've heard of projections of about $10 to $15 per barrel.
Yeah. Well, anybody who tries to forecast the price of oil is like trying to catch a falling knife. You really can't do anything about it. It's an exercise in futility. I could tell you today that the price of oil could go down to $10, but it's not. The next day it will be up to 90. However, there are four critical things you have to know about the price of oil. One is, what was your benchmark price? The benchmark price was 57, it's now 30. Okay? What was the average price of oil by this time last quarter? This time last quarter, the average price of oil was $63. What is it today? 22. It's more than 60% lower. Thirdly, what is the operating cost for deep water, offshore, or land and swamp? I'm told that the marginal cost of a barrel in the deep water is as high as $30 or $32 a barrel, which means that $22 a barrel, those operations and those assets are underwater. Okay? Then there's Saudi Arabia and other things. But as far as Nigeria is concerned, at even $40 of, let me say at $55 a barrel, we're in trouble. At $50 a barrel, we are in crisis. At $40 a barrel, right, we are in deep trouble. And at $22 a barrel, God help us. That's where we are.
So how do we come out of this trouble?
Well, resilience and what we've been talking about. Using this opportunity. We'll get out of it because oil prices are volatile and, what goes down could go higher. But the reality is that we have to build that resilience. We have to understand that we are not a rich country, right? We are an oil-producing country that has addicted to oil revenue and have not done the things that we had to do in the past. But the past is gone and gone forever. Have we taken steps now to address this issue? Yes, I think so. There are some fundamental structural changes that are taking place today, both at the policy level, at the market level, and even at the SME level. People are responding, and you can see those changes. You will not see the effects until after this cloud exists, but there is some good news to come because accepting your fate, accepting your reality, that you are not a rich country, one. Stopping the squandermania. But more important is that it's not just a revenue problem we have a management problem. So people are saying, yes, you must come out and address those problems. That is why you are seeing many layers trying to address this. Vice President's committee, there are other councils, there are all of these people coming together to address the issue, both at the monetary level, at the fiscal level, trade level, and investment level. What's the outcome? The outcome is this, that in Q4, we grew at 2.55%. We believe that in Q1, you'll grow at about minus 1.5%. Q2, if care is not taken, there'll be a negative growth, which means technically, like the rest of the world, we're in a recession. But the recovery from the recession and the lessons we have learned from the past will come to bear, and hopefully, and I think so, that you'll begin to see a gradual but steady improvement in the economic indices. In other words, growth, wealth, reduction of poverty, improvement in opportunities, reduction in income inequality, and more than anything else, a reduction in the misery index. Because as we speak, the misery index is as high as almost 52, 53. More important is the fact that globally today we're told that unemployment in the advanced economies is going to go from in the US, going to go from 3.5% to 31%. I dare say that unemployment in Nigeria is going to, go sky high. It was already 23 in Q3 2018. There's no way that unemployment is not going to go above 40 to 45% after this crisis. But then we will recover, and then we're going to bring it down gradually. And there's hope, there's light at the end of the tunnel. I'm
sure many Nigerians can't wait, until all this blow away. But let's talk about the effect on the Naira now. Of course, the Naira has been falling sharply at the parallel markets. But apart from the currency pressure, could that be due to the BDC's 2-week paucity of trade?
Well, what you have is what I call multiple exchange rate practices. What the central bank has done in the last 2 or 3 weeks is to look for convergence and reduce the level of multiple currency practices, exchange rate practices. Yes, the BDCs, because of some scarcity, they've actually beat the currency down to 415. But the BDCs represent less than 5 or 10% of total demand. In any case, if you buy foreign currency today, what are you going to do with it? You can't travel. You can hardly do any trades. So whilst the supply of foreign exchange has dropped, the demand has also dropped. But the supply has dropped sharper than the demand. So what you are finding now, people are now beginning to take positions that after this is all done, I better hold on to my dollars. The dollar as a store of value is better than, technically speaking, than any other currency today. The point is that the rate of inflation in Nigeria, we talked about panic buying, is going to go from 12.3 to about 13, 14%, while the rate of return on your treasury bills are about 3 or 4%. That anomaly has to be addressed. When that is addressed, then money as a medium of exchange, which is for transactions, and money as a store of value, people will now begin to have confidence to store their money in Naira rather than store it in dollars. It is because the rate of inflation in the US is about 1.4%. And the rate of return on your treasury bills in the US is about 1% or less than that, maybe 0.1% for now. So the negative rate of return on your investments in the US is much, much lower than here, where we have a negative rate of return of about 10 or 11%. So you have to look at, one, the currency because of speculative purposes, the currency which you use because of international trade, which will lead to a more important inflation. But more than anything else, structurally, we have to look at how this currency can be a store of value, where you know that if you put your money even under the mattress, if you put your money in a bank, if you invest your money in a financial instrument, that at the end of the year, your value is not eroded. That is what drives the rational and behavioral pattern of Nigerian and global investors.
Now, what will then be the impact of all this on the burning economic issues?
Well, the truth is that let's accept that we are in a crisis, not just a domestic crisis. We have a regional crisis. We have a global crisis. We have a healthcare crisis. We have a trade crisis. But more than anything else, we already had a fundamental economic crisis. We're going to use this opportunity. It's like, your mother says, you have malaria, but I'm going to use this opportunity to cut your hair and wash your clothes, all right? So you will take your Nevaquin, fine, but you will also take purgative to flush out your system, but we're also going to cut your hair and we're going to dress you up
And while we're dealing with the lockdown now, of course, folks at home will need electricity. And of course, here we're talking about gas constraints, which with only an average power output of about 3,887 megawatts. Now, what's your thought on this?
Power is a problem. The rule of the thumb is that for every 1 million people, you need 1,000 megawatts. So Nigeria, 200 million people, we need about 200,000 megawatts, right? Now, we have 4,000 megawatts. It's not even enough to light a candle, as it were. In Lagos alone, we need minimum. In Lagos alone, we need 18,000 megawatts for the 18 million people here, right? So, and for the whole of Nigeria, we have 4,000 megawatts. Stranded power is another 3,000 megawatts. So we got to address that issue. And it's not what is going to be solved in one day, right? So there are many things that go into it. Forbearance of the old debt, bringing in new investment, cost-reflective tariffs, which has been approved by the Presidential Task Force, the Siemens program, the generation side, the transmission, all of this is together. But we need to invest consistently and efficiently in this system so that people can have power. Because every 5,000 or so, every 1,000 megawatts improvement in power could lead to almost a 1% increase in GDP. So what is GDP? GDP is about $420 billion. 1% growth in GDP gives you at least $4.2 billion. So every time if you do the cost-benefit analysis, it makes more sense for you to improve the power supply and get a growth in GDP that you achieve. For example, there's evidence to show that every 1 hour delay in traffic in Lagos, if traffic in Lagos deteriorates by 1 hour across the board, Third Mainland Bridge, Eko Bridge, Lekki and all of that, it takes away 1% of the GDP in Nigeria, $4 billion. So if you can improve the traffic flow in Lagos and reduce the downtime in terms of traffic, the travel time between home and back. Right now, we spend about 180 minutes to 4 hours going and coming every day, averagely. Some people do less. If you can bring that to 3 hours, you increase your GDP by over $4.something billion. Can you imagine? So the cost of the Fourth Mainland Bridge will be $2 billion. It makes more sense to build a Fourth Mainland Bridge, and because I've been sure you will make $2 billion on that, because you spend $2 billion to build a bridge, you save GDP of $4 billion. So these things are pretty much, they're on the table, and we have to deal with power, we have to deal with traffic, we have to deal with health. More than anything else, we've got to deal with prosperity. People have to be happy, and they have to have,
We'll have to leave the conversation here at this point. CEO of Financial Derivatives Company, Mr. Bismarck Rewani, thanks for coming on the program.
Thank you very much, BC.
And still ahead on the program, an opening call to London as well as the debt and currencies market. Do stay with us.